Ladies and gentlemen, good day and welcome to Greenlam Industries Limited Q3 FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this call is being recorded. I now hand the conference over to Mr. Saurabh Mittal, Managing Director and CEO. Thank you, and over to you, sir.
Thank you. Good afternoon, friends, and welcome to the Q3 FY25 earnings call. I'm joined by Ashok, our CFO, and Samarth from the finance team. I'll speak a bit on the results and on the developments in the company. You probably are aware that we've completed the expansion and the announcement of the commercial production of the particle board plant. This happened on 23rd of January, and the product, the equipment, the production is getting stabilized. And with this completion of the chipboard of the particle plant, by and large, all the capex we announced in FY22 is largely done. So I think after this, we have no capacity creation pending as of now. The particle board has started in Jan 23, 2025. Plywood and Andhra Pradesh laminate plant started in FY24 in September and June respectively, and the Gujarat plant's expansion also got completed in FY24 in May. So now capacity creation across laminate division, veneer flooring doors, plywood, chipboard is largely done. We'll have some pending capex of completion of these projects, some civil work, some other capex work is still pending, which will happen over the let's say next 6 to 9 months. So that's on the capex side, which means that we're now largely free and just to focus on execution of these projects and winning more business across the segments we are present in across all the markets. On Q3, the quarter was slightly subdued in terms of growth. While the flooring, door, and plywood businesses did better, the export of laminates also did better comparatively with slightly over 12% of growth. Domestic laminates and domestic decorative veneer is where we had sales pressure, and overall we could just manage slightly shy of 7% growth. So while Q3 typically is slightly lower than Q2 always, if you see our past track record, this time unfortunately it's been a bit lower than the usual reduction. The feedback we get from people is that demand has been slow in the last 3 to 6 months. My sense is that despite our slower growth, we have potentially won more market share in both international and domestic market. That's our sense, but we'll wait for the numbers to come out of the other companies, and some numbers don't come out in our category as you're aware. Will come out maybe at the end of the FY only. Price realizations, value mix, gross profits, RM costs are largely well maintained, and I think there's been pricing discipline. So I think on those fronts, not much challenges. Raw material costs have by and large been stable in most of our segments. In the plywood segment, costs continue to remain slightly higher, but we had already taken price increases for that in Q2. So from a raw material side, by and large, we think that part will be stable. We have to focus on building more business and more volumes. Freight inwards, freight outward on the import and export side also remain largely stable as of now. With the truce and with the hopefully the closure of the war between Israel and Hamas, we think sea freights might further reduce, and shipping time to several markets might further reduce, helping us improve our working capital cycle, reduce some costs, and have faster supply chain into the markets in Europe and some other parts of the world. So that's on the supply chain side. Product development, streamlining of manufacturing plants at plywood, Andhra Pradesh laminate, by and large is all settled. factories are nicely settled. The challenge is to build demand. Debtors period also by and large remain under control despite the slackness in the demand. I think we're able to manage that well. Certain inventories are slightly higher, which also includes some particle board inventory of raw material, etc. CFO will will communicate on that. So by and large, on ground, things are under control. Our preparedness is going well, and we really hope that we bounce back with a better growth, in Q4, and obviously for next year also we expect better growth coming in. So by and large, that is from my side. I will have Ashok take you through the financial performance, and we'll be happy to respond to your queries. Ashok, over to you.
Good afternoon, friends. I'll take you through the financial performance. First, for the quarter, on a consolidated basis, net revenue for this quarter grew by 6.9% on year-on-year basis, and however de-grew by 11.6% on a sequential basis to 602 crore as compared to 680 crores in quarter 2 in FY25. Gross margin grew by 20 basis points to 55% in Q3 this year from 54.8% in Q3 last year. On a sequential basis, gross margin grew by 340 basis points. Gross margin in absolute terms grew by 7.3% to 331 crore in Q3 this year as compared to 308 crore in Q3 last year. EBITDA margin was down by 200 basis points and stood at 10.6% in Q3 this year as compared to 12.6% in Q3 last year. EBITDA in absolute terms de-grew by 10.7% to 63.5 crore in Q3 this year as compared to 71 crore in quarter 3 last year. This is due to slower growth into the domestic market. Net profit for the quarter stood at 12.5 crore in this quarter as against 25.3 crore in quarter last year due to lower EBITDA, higher interest and depreciation for new projects, and one-time tax for earlier years. Moving on to 9 months, consolidated net revenue for the 9 months grew by 12.2% to 1,888 crore as compared to 1,682 crore in 9 months last year. Gross margin was flat at 52.8%. Gross margin in absolute terms grew by 12.3% to 997 crore in 9 months this year as compared to 888 crore in 9 months last year. EBITDA margin was down by 150 basis points at 11.1% in 9 months from 12.6% in 9 months last year. EBITDA in absolute terms de-grew by 1% and stood at 209 crore as compared to 211 crore in 9 months last year. Net profit de-grew by 31% to 67 crore in 9 months this year as compared to 97 crore last year. Now I'll move on to segmental performance. First, the laminate, which is the major segment for us. For the quarter, laminate revenue grew by 4% on year-on-year basis. However, de-grew by 12.9% on sequential basis to 520 crore from 500 crore in quarter 3 last year. EBITDA margin stood at 13.2%, a degrowth of 270 basis points on year-on-year basis and a degrowth of 150 basis points on quarter-on-quarter basis. Production volumes were at 4.86 million sheets with a utilization level of 79% on the enhanced capacity of 24.52 million. Sales volume for the quarter stood at 4.77 million sheets and boards, a growth of 2.6% on year-on-year basis and a growth of 7.8% on a sequential basis. Our average realization for the quarter stood at 1,050 per sheet and board, which was marginally up by 1.3% on year-on-year basis. Moving on to 9 months, laminate revenue grew by 9.9% and stood at 1,651 crore from 1,503 crore in 9 months last year. Volume grew by 7.8% on year-on-year basis. EBITDA margin stood at 13.9%, a degrowth of 180 basis points on year-on-year basis. Production volume were at 15.56 million sheets, a utilization level of 85%. Sales volume for the 9 months stood at 14.82 million sheets on board, and our average realization in this 9 months was at 1,075. Moving on to another segment, decorative veneer and allied. This segment includes decorative wood veneer, engineered doors and engineered doors. In the veneer segment, overall veneer segment revenue of decorative in the decorative veneer segment, revenue of decorative veneer business degrew by 4% on year-on-year basis and degrew by 9% on sequential basis to 26.3 crore in this quarter from 27.4 crore in quarter 3 last year. The revenue of decorative veneer business degrew by 12% on year-on-year basis to 78.3 crore in 9 months from 88.7 crore in 9 months last year. Volume degrew by 7.8% on year-on-year basis. Sales volume for quarter 3 stood at 0.26 million square meters and for the 9 months stood at 0.82 million square meters. Capacity utilization for this quarter was 27% and for the 9 months stood at 28%. Average realization for the quarter was 988 per square meter and for 9 months it was 944 per square meter. Moving on to engineered wood flooring. Revenue for the engineered wood flooring business grew by 13.8% on year-on-year basis and grew by 7.2% on a sequential basis to 15.2 crore in quarter 3 this year as against 13.3 crore in quarter 3 last year. For the 9 months, revenue of engineered wood flooring business grew by 15.7% to 42.7 crore as against 36.9 crore in 9 months last year. Capacity utilization stood at 13% in this quarter and 14% for the 9 months as a whole. Moving on to engineered doors. Revenue of engineered doors business grew by 49.5% on year-on-year basis and degrew by 8.6% on a sequential basis to 10.4 crore in quarter 3 this year as against 7 crore in quarter 3 last year. For the 9 months, revenue of engineered door business grew by 42.8% to 31.6 crore in as against 22.1 crore in 9 months last year. Capacity utilization for the quarter stood at 27% and for the 9 months stood at 24%. Moving on to next business segment, plywood. Revenue of plywood business stood at 30.4 crore in quarter 3 this year and 84 crore in 9 months. Sales volume for the quarter stood at 1.16 million square meters and 3.3 million square meters for the 9 months. Capacity utilization for the quarter was at 24% and for the 9 months also was at 24%. Average realization in this quarter stood at 257 per square meter and for the 9 months was 248 rupees per square meter respectively. In the current quarter, working capital cycle stood at 67 days as compared to 59 days in quarter 2 of this year. Net debt stood at 1,012 crore. Thank you. That's all in this. Now I'll open the floor for the question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to only use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take a first question from the line of Keshav Lahoti from HDFC Securities. Please go ahead.
Hello. Hi. Thank you for the opportunity. So firstly, I know it's early days, but now the particle board plant is commissioned. How is the initial thing going up, and what sort of ramp up you are looking, and when you feel this plant will break even, and how is the current market scenario? Hello?
So yes, Keshav. So I'll take the question on the demand side and all that. So the initial feedback from a demand side and signing up of dealers, wholesalers is quite encouraging. So I think that part is pretty okay. And as I said earlier, the stabilization, of the commercial production, because it's a automated line, a lot of sync needs to be done from the process control perspective, from raw material to the board production. I think that's underway as we talk, and we should be looking at a 40 to 50% kind of utilization in FY26, and we should be near break even at I think a 50% kind of utilization level.
Understood. Got it. And sir, what about your revenue growth guidance, which you have given 18 to 20% for this? Will you maintain that? And how you see the laminates margin going forward? This quarter we have seen some dip. Should we expect the quarter two margin will be back in upcoming quarters? Because we have also taken a price hike in Q2 end.
So FY25, I think we'll miss the 18-20% growth number. We're about 12% in 9 months, and my sense is, if things go, as we see things, probably will end the year somewhere in the band of 12-13% types of growth in FY25. FY26, we maintain that we should be in the band of 18-20% type of top line growth. So that's on that. On laminates, so clearly the challenge is more on the volume side. As you probably have seen, gross profit, per sheet realization, that's all well. We just need to expand the volumes, and then I think the profits, the EBITDA margins, etc., should get back to that 14-15, in that band percent. So let's see how this quarter goes. But price realizations and value mix, etc., is all going well as we can see things now.
Okay. One small last question from my side. Has the demand picked up in January for laminates?
So Jan has been okay. It's not like it's not extraordinary, great or negative. I think it's fine.
Better than 3Q, what we are experiencing in the demand.
Well, I'm not sure I can say all that a lot, but yeah, it's as of now, going on line with what we think we should be able to deliver in this quarter. Yeah.
Understood. That is helpful. Thanks a lot.
Thank you.
Thank you. Before we take the next question, we'd like to remind participants to press star and 1 to ask a question. Next question is from the line of Udit Gajiwala from Yes Securities. Please go ahead.
Yeah. Thank you for taking my question, sir. So firstly, on the gross margins for the laminate business, so what can be the steady gross margin that we can look at? It's moved up from 52 to 55 on sequential basis.
Yeah, hi, Vit. So this is at the similar level what we are at. We believe that it should be in the range of around 53 to 55% kind of a things. It should be within that range. Quarter on quarter, there might be some variation, but it should be within this band. We believe this is what it is there as of now, can be maintained unless there is a significant jump in the price of raw material, which is not as of now doesn't look like.
So sir, just trying to understand that what changed on sequential basis. Of course, our ASP are up, but not so much on sequential basis. Any particular RM that came down in terms of costing?
Nothing in general in terms of that, because in the December quarter, what happens every time we get some year-end bonuses on some packages. So that is the reason that in the December it is slightly go up in comparison to other quarters. Otherwise, it is normally within the same band. That is specifically for the laminate.
So 9 months to 9 months, we had a similar gross profit of 53.5 times.
Understood, sir. And so lastly, in terms of the growth guidance that you have maintained of 18 to 20 for next year, any sense on what kind of blended margin should we look at? Like, because particle boards will not contribute in terms of EBITDA, but overall, where do you see the margins moving? Thank you.
So Udit, in the next quarter, next year, we are hoping to have the break-even in the particle board, but obviously that may not happen in the first quarter or quarter one. So that may take time probably in terms of that. So it's difficult to predict as of now what the EBITDA looks like, but we believe that normal EBITDA in the other than particle board, we will have a normal EBITDA, our normal EBITDA. Particle board, probably we have to wait for 1 or 2 quarters to watch. But the intention is to break even in the next year.
Understood, sir. And just the last, if I may squeeze in for the plywood segment, how do you see the ramp up happening in X of the southern region? If you can throw some light in terms of your acceptability of the product there.
Sure. So if you see plywood, the feedback we said last time also on the product quality, on just the performance of the product, I think it's been exceptionally good. And the channel partners and customers who start using our ply, the feedback we've received is that they continue using our plywood. The channel expansion or the creation, I think up to 80% is largely done in South India. We also started opening markets of Maharashtra in April 2025. So that process is still going on. And we are hopeful, like this year, if you see, we are already 84 crores of sales in ply. My sense is, versus what we did last year will be nearly 2x this year. And I think the coming year we should double from FY25's number in FY26. So clearly, I think because we're going to operate in the segment in the long term. So I think the product performance, the quality, the secondary working, channel partners, who have been created, I think it's going in a good direction. Maybe a bit slower than what we expected, but I think from a qualitative point, I think it's going good. So and we should keep growing this part of our business.
Understood, sir. And so specifically for ply, what was the timber cost in Q3 versus Q2 for the segment?
So by and large, the wood costs have been similar in our south because our plant is in south. It's been by and large at the same, average, say maybe some local costs might have gone up a bit. We had taken certain increases in Q2, and that's why your gross margin is by and large similar, but maybe Ashok can add something.
So in the beginning of the quarter 3, there was some upward movement, but later on it got stabilized in terms of that. So as of now, prices are not reversed, but it's not increasing also either. It's stable as of now. So and we are hoping that probably with the supply situation increase, so it may have an impact on the price.
And the same trend has been in January as well, right? The prices have been stable, is what you...
Yes, that's right. Yeah,
got it. Thank you so much for answering, and all the best.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We'll take our next question from the line of Sneha Talreja from Nuvama Wealth. Please go ahead.
Hi, good afternoon, team, and thanks a lot for the opportunity. Just 2 questions from my end. Firstly, on your FY26 guidance of 18 to 20% growth, just wanted to drill down what will be the proportion of particle board itself, because earlier we had given a guidance will be operating at about 40 to 50% utilization. If I make a rough calculation and bring it down to even minimum of 300 to 350 odd crores that revenues that you do, are you aiming for like a single digit or medium single digit terms of volumes for your existing laminates business, or am I missing something else?
No. So you got the question right. We're not aiming to do all that. But We have to minus a little bit figures and give them, because sometimes whatever figures we give doesn't get achieved at times. So I don't know what to do on this front or not. So clearly, that is not the plan. But yes, considering, market situations, if there are unpredictable circumstances, which we can't predict at the moment. So we've given a broad, direction on where the growth numbers should look like. Yeah.
So broadly, single-digit growth at this point of time for the laminates business is what I understand, or including your other businesses put together.
No, because if you see ply, I think we should have decent growth. Flooring and veneer also we expect decent growth coming in, and likewise for our domestic and our international laminates business. So we're quite positive on all our businesses, but yeah, sometimes things don't go as a plan, and then yeah.
Would you want to quantify some numbers out there, maybe in terms of growth numbers for laminate separately, plywood separately, or maybe just particle board itself, so that we can derive on certain numbers?
I think it's very hard to do all that, but because we can just give a broad kind of, you can speak to Ashok offline on that, Very hard to do that. So from our side, I said that earlier, most of the capex are done, the capacities have been built, they've been built well, and with the product quality, the product programs have also been nicely done. We really hope things only gets better from there.
Right. In terms of particle board, given, we are almost there, any sort of visibility that you have already started getting from OEMs for your product, any visibility out there? And what is the percentage of imports at this point of time coming up would be, coming in the market, which you plan to replace? Some numbers there?
So the feedback on the product is on the shade card, range selection, the finish is quite good. Wherever it's gone, it's not penetrated as of now in the market. It'll take a few more months to get there. The initial order booking by customers of inventory, etc., is also quite decent. So I would say the feedback is positive. I think we will just go settle the plant and keep delivering. As we know that there are hardly few meaningful committed players in the space in terms of capabilities, capacities, sales marketing team, and we have this advantage of alignment of melamine chipboard. As you know, particle board mostly gets sold as pre-laminated product and not plain board. So this alignment of melamine particle board with Greenlam laminates, with Greenlam Sturdo, Greenlam compacts. So this whole alignment of the product program with the other products which are used in interiors, I think is a great strength our company possesses, and we hope that we'll use it to the fullest. So I think the feedback as of now, what I know, is quite good actually. Yeah.
Understood. And lastly, if at all, I can just ask one more question. Anything on the BIS? We are closer to the date of implementation. Anything that you're hearing on ground? Is it likely to get implemented this time? Seeing some delays? Anything here would be helpful.
So I think chipboards have extended, but answering your other question, imports of particle board is not so much in our country. I don't have the exact number. It's very small, and so maybe Ashok can give that number.
Yeah, whatever last we have got the number, it was in the range of around 300 crore
per annum.
Yeah, it was 300, 350 in that range only, not very high.
On the BIS, we are hopeful it gets implemented, but I'm not sure whether they will implement or there will be some extension or will there be some extension for some parts of some kind of manufacturers. I'm not so clear on this, but we've heard that it should get implemented. People have proposed its implementation, but I'm not completely clear on the subject.
Understood. So got it. Thanks a lot, team, and all the best.
Thank you. Next question is from the line of Utkarsh Nopani from BOB Capital Markets. Please go ahead.
Yeah. Hi, good afternoon, sir. So my first question is for laminate segment. So if you could specify what is the laminate volume growth for domestic and export market in December quarter, and what is the reason for sharp contraction in laminate margin in December quarter on both Q1Q and YOY basis, and what would be a margin guidance for the current March quarter and FY26 for your laminate segment?
Yeah, because in terms of we don't give the figures separately for the domestic and export. Overall total figure is we have already shared in terms of growth in this quarter. The volume growth was 2.6% on a year-on-year basis.
Okay. So earlier, like, we have been specifying the percentage, what kind of a growth we have seen in export and domestic market. So that's why I was asking. But that's fine. And if you can just mention the reason for the sharp contraction in laminate margin on a Q-on-Q basis in December quarter. What is the reason for that?
So in terms of, if you see that, the revenue laminate has grown by 4% only in this quarter on year-on-year basis. So basically, the sales is lower, and whereas the operating cost is at a higher level in comparison to previous years. So that is one of the reason in terms of that. We expect that sales to correct in going forward, and which will correct the overall margin scenario.
And so what would be your margin guidance for current March quarter and FY 26 for laminate segment?
So normal margin, which we have, if you see in this quarter, we were having around 13% margin. Of course, from the previous year, it was 15.9%. Previous year was 15.9%. So we are hopeful that it will be in the range of our normal margin, which is around 40-odd% is the margin which we in that can be achievable. Otherwise, that there are some additional expenses in the quarter three, like starting of our two of our depots overseas. So due to that, there were some additional expenses which going forward will not. These were one-time expenses. So going forward, this will come back to normal margin.
Okay. And sir, second question is on your particle board project. Like, we have spent around 735 crore on this project to complete it, versus our earlier guidance of 875 crore, which was there in last quarter. So, what is the reason for sharp reduction in our project cost? And are we going to incur any additional cost on this project going forward?
Yeah. So it's not the change in the spending. It was we have spent that this was the money which is spent till now. The project, even though the commercial production is started, but still the construction and spend is going on as of now. So this will be there till, as mentioned by sir also, it will be in next 6 to 9 months. It is going to be spent, and it will be in the range of that what we have earlier intimated, in the range of 875 only.
Okay. And sir, what would be the budgeted capex for FY 25 and 26, and how much we have spent in the 9 months of FY 25?
So 9 months we have spent close to around, including the new project, around 190 crore. We expect, including the project, it should be in the range of around 250 odd crore. And for the FY 26, including the some of the capex which we need to do for the project, pending capex for the project, it should be in the range of around 100 odd crore.
Okay. And sir, lastly, like, if I look your balance sheet, your net debt to EBITDA has now gone up to close to 4x, which is on a vulnerable side based on December quarter number. So where do you see this ratio shaping up in FY 26?
I think this is at the highest level in terms of the what we can see as of now. Debt is also at the highest level because most of the capex has already been done. And now and since we don't have any large capex going forward, so whatever cash will be generated, that will be used to bring this debt down, and we believe that it will be lower than this year.
Okay, thanks a lot, sir.
Thank you. Before we take the next question, we'd like to remind participants to press star and 1 to ask a question. Next question is from the line of Rishabh Bothra from Anand Rathi Share and Stock Brokers, Institutional Equities. Please go ahead.
Yeah, good afternoon, sir. So just wanted to understand what kind of exposure do we have in UP market, and is there a meaningful change with respect to Kumbh? And secondly, what's our exposure to the US market? Will the tariff impact somehow our business in laminate export market?
So there is not much of a exposure in terms of to the UP market, and the Kumbh is practically not impacting us in terms of any additional demand and all this, because most of these demands are at the very low end of the segment for the construction material, where our product is not in use in most of the cases. And moving on, in terms of the export, the US, which is North America, is not a very significant portion of our export. Around of our export globally, total international revenue, it will be in the range of around 5-6% of our overall export revenue, global revenue. So we are not expecting much a problem in that.
Okay. And lastly, sir, if you can tell the guidance for FY26 and the debt trajectory, how it will pan out, I mean, reduction in debt.
So debt within this year, it will be in the range of similar to what we are, so around 1,050 in that range only. And next year it should come down from this level close to it should be within 1,000 crore.
Okay. And the guidance, if you could spell out once again, I missed out on that.
It's already mentioned, told by sir. It's around 18 to 20%.
Okay. Thank you, sir. I'll come back. Thanks a lot.
Thank you. Ladies and gentlemen, to ask a question, please press star and one on your phone. Participants who wish to ask a question are requested to press star and one now. Ladies and gentlemen, to ask a question, please press star and one on your phone. We'll take our next question from the line of Bhavani from JM Financial. Please go ahead.
Yeah, hello. I'm audible?
Yeah, please go ahead.
Yeah, sir, thank you so much for the opportunity. I just wanted to understand on the veneer side of the business and the allied products category. So what has been changing in the door and the floor category particularly? So can you just once again spell out the door revenue and the floor revenue if you can?
Yeah. So for the 9 months, the floor is around 43 crore and door is 32 crore. So total put together floors and doors are 75 crore in these 9 months, which is in the last year during the same period it was 59 crore.
Got it. So I just wanted to understand that this door business, no doubt, has been on a lower base, but what has been changing over here and how one should look at down the line for next 2 to 3 years?
So on the door business, there's decent traction. Our order book and pending orders is quite encouraging, and so we think the business will keep improving in this 3 months and even in the coming 1 and 2 years. So what has changed, I would say, just continuous effort over the last couple of years, where we struggled to bring in the orders, get the product mix right, win confidence with customers. Maybe that's happening as we talk right now. And the full capacity of the door plant, in terms of value, because either we produce door leaves or door sets, is something in the band of 80 to 100 crores. So I think we should start hitting, we should keep improving our utilization and improve revenues in FY26 and FY27.
Got it. So if you can also help me with the guidance on the veneer and the allied product, the entire category, if you can just help me also on the margin side, how one should look at on the margin side. And I think in Q3 you have done on overall basis in veneers and allied products 2.6% kind of EBITDA margin. So how one should look at this EBITDA margin going forward?
So going ahead, our sense is this will keep improving. Like floor has become EBITDA positive in Q3 and in 9 months. The losses in door vertical has reduced. So we think now these 3 categories, and you probably have noticed capital employed in this category also has gradually come down over the last 2-3 years. So we don't need fresh, capex or capital in this category. And with business improving, with sales volume increasing, clearly all should flow down to the profitability and cash flow, because we don't need to add much resources in terms of people or marketing and all that. So I think it should keep improving.
In FY26, can we assume 4 to 5% kind of EBITDA level in this category?
Yeah, yes.
Sure. Thank you so much.
Thank you.
We'll take our next question from the line of Saurabh Kinodia from Smiths Limited. Please go ahead.
Yeah, good afternoon, sir. Thank you for the opportunity.
Saurabh, your voice is not very clear. Can you use your handset mode, please?
Yeah, is it clear now?
You can go ahead with the question.
Still a bit muffled, but if you speak a bit louder.
Yeah, I'll try to speak a bit louder. So on an annualized basis, what kind of an increase in depreciation and interest one should estimate on the new particle board plant?
So the depreciation will be in the range of around 30 to 35 crore, and interest will be in the range of around 35 to 40 crore. This is in the as of now interest scenario. In case the interest rate moves, which is everybody is expecting to go down, so then this cost can come down.
Understood. That was so much. Thank you.
Thank you.
Next question is from the line of Parth Bhavsar from Investec. Please go ahead.
Hi, sir. Thank you for the opportunity. My question is related to laminates exports. So over the last, 2 quarters, Q2 and Q3, and as we enter, Jan, so which are the markets there where you see green shoots? Like, is it Europe or is it US or the other way, like which has declined for us year on year and even quarter on quarter?
So as you know, our markets are quite dispersed, because we ship to many countries because of the nature of the business, and different products at different sizes are needed everywhere in different markets. So hard to give you a analysis. So 9 months, I think export business grown by about 15%, 9 months on 9 months. So hard to give you a number. Obviously, some markets end up doing slightly better than the other markets. But hard to exactly pinpoint.
I had to ask you, specifically, I had to ask you about Europe and US. Like, how is the demand looking like over there?
So generally, in the international markets are, the markets are growing at a very small pace or not growing. So in the international markets, in Europe, including UK, we are winning market share, from the local companies, because they've got added capacities or they have their own challenges, or winning business from somebody else. So I think in the international markets, mostly the story is more about market share gains and less about organic growth coming in. So Europe has become our largest market, which is all Central, Eastern, Western Europe and UK combined. So we're doing okay there. We're doing pretty okay there. US, I would say we are flattish, more or less. Yeah.
Okay. Got it, sir. Thank you so much.
Sorry. I know sometimes these conversations are not so helpful.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Saurabh Mittal for closing comments. Over to you, sir.
Thank you for your time and patience, and also for your queries and interest in the organization, and we appreciate them. We also would like to, I think you already know, but we still like to inform you that our company is completing 10 years of listing in March 2025, and the board has announced a 1:1 bonus share issue, and this will be our first bonus share issue by the company. And we would like to thank all of you for your support and contribution through the last decade. And we really hope that we continue doing well. And thank you for your time.
Thank you, everyone.
Have a good day.
Thank you, everyone.
Thank you. On behalf of Greenlam Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.